Welcome, welcome, welcome. Welcome to everybody in our Home Care Business Advisors membership group. I am happy to be here this evening with our guest speaker, Gerard Quinn. Gerard Quinn is a longtime friend and professional associate of mine. How long has it been now, Gerard? I'm assuming about 20-something years.
At least we talked about 19, 20 years when you were
About 19, 20 years. So Gerard has been an orchestrated piece of the building of my company. When I first wanted insurance and went into the industry, Gerard was able to guide me, show me, try to teach me the understanding, all the mechanics of insurances. But like I said, I trust him impeccably and wanted to bring him to you today, so that you'd be able to share your questions and hear it directly from the man that knows. So, Gerard, why don't you just give us a little bit of background on yourself before we jump into these questions?
I've been in the insurance business about 36 years, principal of independent insurance agency where we represent a number of different insurance companies so that we can go out for our clients and get them the best coverage for the best premium. And we have a small agency with about 10 of us, and it's just myself and a business partner. But the agency's been in business since 1921.
And you're not that old.
No.
Okay, well, it's great to have you, Gerard. As I mentioned, I thank you so very much. I'm honored that you're here. We can jump right into some of these questions. So, in speaking to our members, one of obviously the key things is, what kind of insurance do I need? Our audience are from all over the country. We go as far as New Mexico to New Jersey. We've got North Carolina, South Carolina, we're everywhere. So I wanted to be able to give some general insight and some general education on what the typical insurances as a home care business owner, which can be sometimes different from other entities and other companies, may need. So the first thing, which is very general, which we all have heard the term, is professional liability. Explain what that is, Gerard.
Well, most of you would be licensed for your entities, and you'd have a professional liability exposure in the event you were to cause some sort of injury to one of your clients while you're performing your professional services. Professional liability would provide bodily injury and or property damage as a result of your professional negligence.
Okay. And how would that typically work in terms of, the filing of such claims?
Any claims that arise can be submitted through us, and we report it to the carrier and stay on top of it throughout the claim settlement process.
Okay. And then with the general liability, generally comes with the professional and general. So tell us a little bit about the general liability.
General liability is for bodily injury or property damage claims that would arise that are not professional liability claims. And that's in the event that you cause some sort of bodily injury or property damage to others as a result of your negligence.
And is that something that is absolutely required? I do know that, some professionals or some entities require you to hold a certain amount, a limit or an aggregate, I guess is what they call it. But is that absolutely necessary for all types of startups?
Yes, it's definitely a critical part of your insurance program because you can have liability claims that are not professionally related. Suppose you're in a client's home and cause some sort of bodily injury or property damage accidentally, which is not a professional liability claim, then it would fall under general liability. And if somebody files a claim against you, then the insurance company goes in and provides legal defense and also up to the policy limits. A lot of times it might be $1 million per occurrence, $2 million aggregate for general liability. And that gives you coverage while you're operating on the premises or away from the premises.
Right. And that term aggregate, again, if you can just be a little bit more
sure,
widened in terms of what that means.
Sure. It'd be most of the time the policies are written with a limit per occurrence. So suppose it's $1 million per occurrence. That would be the amount that's available for the insurance company to pay out as a result of your negligence for bodily injury or property damage as a result of one claim or one occurrence. An aggregate of 2 million or 3 million, whatever limits on the policy, is for over the policy period. So if you have more than one claim, you'd be subject to $1 million per occurrence and either 2 or 3 million over the term of the policy period.
So I'm assuming then, Gerard, that aggregate is really there for if there's anything past the term of that policy, if there's anything that's still pending, that there is still some coverage after the policy is lapsed.
Well, the aggregate is for more than one claim. You know, the occurrence is as a result of one claim, the limit that the insurance company makes available for that claim. Aggregate would be for more than one during the policy period.
Okay, understood. Okay, so another one of the major liability terms that is used in home care and startups, especially more so for home care agencies, is the non-owned auto. And, you know, I've been speaking to some of our members, and, you know, it's one of the things that is just like out of sight, out of mind. And again, I wasn't introduced to it until you was able to give me a quick DNA on all the things that I would need. And obviously that was one of them. So, you know, as it dictates, you know, it's related to auto coverage, but if you can go a little bit more into detail with that.
Sure. The employer's non-owned auto liability would be in the event, suppose you have an LLC or a corporation, and even if you use your personal car to run errands for the corporation or LLC, and there's an accident involved, the injured party can sue the employer as well as the person who owns the vehicle that caused the accident. So that's called employer's non-owned auto liability. And normally we would write that for the same limit as the per occurrence, say $1 million. So if you have any employees and they use their personal vehicles to either go to a client's home or even to the bank or for supplies, and they get involved in an automobile accident, you can be adjoined in a lawsuit as the employer because they're operating as an agent for the employer.
The employer, exactly. And again, guys, members, you know, it is very important. Again, the things that we really just take for granted, you know, it's just a quick run to the post office, as Gerard said, can be something that could be very, very critical. You know, I've had and I've seen stories of an employee using her vehicle to transport a client, and she was actually being transported from a skilled facility at the time in New Jersey, and got into an accident. Unfortunately, the accident took her to the hospital with, you know, spleen and all kinds of things that were damaged and injured and so forth. And ultimately, in 4 days, she died. So it's really, 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 really imperative that, you know, things like the non-owned auto policy is taken very seriously, just as you would for your startup, your professional and general liability. Do not just think that it's never going to happen to me, because, you know, what will happen, what you don't think is going to happen will happen. So let's just take those few items, Gerard, the professional, the general, the non-owned. I mean, I think really that those are the major ones that a new startup would potentially need. You know, we can most definitely go into other things like an EPLI insurance coverage or an umbrella insurance, but maybe we can hold that for another sitting. But my question to you is that, you know, with regards to insurances and the few you just mentioned, what would you actually say is a typical startup cost in terms of, insurance coverage?
It all depends on the size of the operation, whether it's number of employees, payroll, things of that nature. So if it's a small, one person setup, you could possibly pick up a liability policy somewhere for $500 to $1,000 a year. The professional liability could be $750 to $2,000. Hired non-owned, you can put onto the general liability, hopefully. And there is another coverage that kind of goes piggyback with the employer's non-owned auto liability, and that's hired or borrowed auto liability. In the event you rent the vehicle and that vehicle's involved in an accident, then that's an exposure also. Or if you borrow somebody else's vehicle and get involved in an accident, that's another exposure. And those.
So there are a lot of ways, Gerard, in terms of creating this bundle of coverage. So there's other areas that may go under, like for example, bodily injury. That comes under general liability insurance, correct?
Yes, bodily injury and/or property damage, unless it's professional liability exposure, and that would be under the professional liability in comparison to the comprehensive general liability.
Right. So, and I know that obviously depending on the size of the startup is going to be obviously indicative of how much that is going to be. But for somebody who is just starting out, no employees, but doing a typical startup, I need insurance just to get my license, which is typical of most states. You need to have it before you can use it. What would that look like for general, non-auto? What would that look like typically, just in a estimate?
Hopefully, you could bundle it into something around $1,500 to $2,000 just as a startup. Which is
that's an annual.
Yes. Yes. Yeah. And
okay.
It could either be paid in full. You can do a premium finance if the insurance companies do not offer an installment payment option.
Right. So that's always a good thing, is that, of course, you don't want to, in the beginning of a startup, just to be putting out $2,000 here, $2,000 there, because it does add up. So again, guys, your insurance agent should be able to provide you with some different types of avenues in financing your coverage. I always do that with Gerard. He always asks me, but he really doesn't know the answer, and that's going to be no. I would like to finance. Just so that we can do it and make sure that we've got smaller payments over the course of time. And my last question, just to wrap this up, is should I obtain business property insurance? So if I'm renting an office, should I actually be also obtaining insurances?
If you have an exposure, if you even if you have a home office, you want to make sure that you have some sort of coverage under the homeowner's policy or a separate policy. If you have a computer, fax machine, things of that nature, because there's certain limitations under your homeowner's policy for business equipment. And, depending on what you have for your business, phone system, fax system, computer system, it's nominal as far as the amount of coverage and premium that it would cost you to be properly protected. Right.
Yeah, so even though I have my home computer and I'm bringing it to my office, that needs to be covered because, if anything happens to it, it's in the office space, that's the insurance is going to come under.
Yes, and you're talking about a small amount of coverage and a small premium. And a lot of times, if you can throw in a little bit of contents, whether it's $5,000 or $10,000 of contents coverage, it can help with price, cost containment for the insurance, because they have a business owner's policy or a commercial package policy may be less than writing a separate general liability policy.
There's so many different names and terms and so forth. I have a question here. Is the term claims the same as being sued?
You can have a claim that doesn't involve litigation or suit. If somebody sustains a bodily injury or property damage, you can file a claim and have the insurance company defend you and make available the liability protection without a suit being initiated.
Okay. So if I'm another question, I'm sorry, Gerard, go ahead.
If you do get sued, then it definitely turns into an insurance claim.
Right, absolutely. So next question has just come up from our viewers today. So if I'm a small startup and one-person operation, I team together with another provider to limit the cost of finance.
Not unless you have some sort of association and we get an insurance company that will write the coverage in the association name and then include the members. But the insurance companies really, shy away from that.
Right. And it's generally based on the LLC company name. It's not going to have, ABC agency and I'm going to also cover, 2 people from X, Y, or Z agency and put it together so everyone's got split costs.
Yeah, the insurance companies look for the majority of ownership, control, interest be, by one organization. And then if you have the majority of interest and control, then you can add other entities onto that policy. And there is some cost containment. The more premium you pay, the more credits the underwriters have to apply to try and keep the cost down.
Right. Well, I thank you also for those who are, tapping in and passing on some questions for Gerard this evening. I do have another question as we're wrapping up the segment here. Again, with our group, Gerard, we have members all over the country, and and them coming to myself for advice and direction and mentorship and guidance and so forth. Of course, always want to put them into the right hands. And like we mentioned at the beginning of the segment, is that you've been with me for over 20 years. No matter where I am, no matter what state I am, you're always there to help guide, stay on top of it, even when I forget that my policies are being reviewed or being canceled due to underwriters not writing for home care any longer. You're always there to keep me on track. So my question is that do our members have to specifically obtain a broker and agent in their own current state?
No, we're licensed in all 50 states, so we can help anybody out that would like to take advantage of our service. There isn't any cost or obligation, and we would hope that it would be mutually beneficial.
Right. And I do know that some of our ladies have been in touch with Gerard, and things have worked out, very well for both parties. So again, just wanted to make sure that we did extend all of that information for everybody else in saying, where no matter where you are in the process, it doesn't matter if you have insurance right now, it's always good to be able to look at other options. Gerard's role for me as a home care provider is that he looks at the best option for me. He doesn't just say, here is one, Yvette, they can write this policy, sign on the dotted line, and then send a check. What he said is that give me 24 hours, Yvette, because I still want to farm this out. I still want to go out and solicit other bids before he actually gives me a final number and say, I've done as much as we can at this point. These are what we've got to work with. So, just know that, having these key people in your corner, your legal, your financial, your insurance are going to be key in your progress in your startup and your overall business operation. So for myself, I thank Gerard for all he has done for me over the past 20 years. Let's see if there's any other questions from anybody that we may be able to answer before we wrap up here. And Gerard, by all means, if there's any other areas that you may want to touch on that we may have not touched on this segment, please feel free to do so. And like I said, we'd like to maybe get a second presentation going where we can actually touch into more of the detailed coverage, like I said, the EPLI coverage and so forth.
I'd be happy to do that, Yvette. All your people have to do is call and say that Yvette referred me to you, Gerard, and I'm very responsive because Yvette holds me accountable. So
I do. like that. That I do.
You know that the call will be answered. I tell people that I have a wife and 4 children and college tuitions and so on and so forth. So I'm pretty much a workaholic and answer the phone and emails and text messages 24/7, 365 days a year. And we can expand if you're interested in talking about workers' compensation, the employment practice liability insurance, umbrella insurance, fiduciary liability insurance. There's a lot of other cyber insurance, data breach.
Right.
And,
as a matter of fact, why don't we do that right now? Let's just touch on workers' comp again, because workers' comp is something that's very general as a startup and understanding of it. We have had some posts in the past about workers' comp and what it means and how it's calculated, etc. But, let it come from the horse's mouth, Gerard. Let's just touch on workers' comp. What is workers' comp and how does that actually work?
Workers' compensation provides coverage for any work-related injury and or illness for yourself if you're included for coverage, as well as any employees that you may have. So in the event somebody sustains a work-related injury or illness, then we submit a workers' compensation claim, and then the insurance company will pick up the medical payments coverage. And if there's lost wages after a certain waiting period, similar to unemployment, then you have loss of income and for a reasonable amount, similar to unemployment.
I have explained to our members about workers' comp that, workers' comp is driven based on payroll.
That's correct.
It's not just, okay, I'm going to get a quote. It's run by payroll. So you can either do the pay as you go or you can do the premium. Back in my day, if you remember, Gerard, we had to have the workers' comp that I paid in advance. And then every year we get audited. And sometimes if I hadn't covered enough or I didn't project enough, at the end of the year, I maybe have $20,000, $30,000 of a premium that I had to pay to the workers' comp company based on what I did in fact generate through my payroll. Now that things have changed somewhat, that you can do the pay as you go. AIG is one of the most popular one that I know. In terms of, whatever your payroll number is, they put in a rating and how much you have paid towards that rating, and that's what they calculate as your workers' comp premium for the month. Every year is a audit. You are not free from an audit if you go as a pay-as-you-go. You'll still be audited. So always, always, always have your records, keep your records, know your numbers, because there are those inspectors, the inspectors of workers' comp, the inspectors of your insurance companies, the inspectors of the state. There's inspectors everywhere, so we need just to make sure that we can stay on track and keep our numbers right. So that's just in closing, Gerard. Thank you very much for touching on that. But again, if there's any questions, please let us know. I'm going to just give it a few seconds there. Anybody who does have any questions about what was mentioned here, I do have a question that just came out. The question is, Gerard, since my business is a home care placement agency, placing caregivers to be employees of the families they serve, the family chooses not to get their own GL and workers' comp for their new employee caregiver that we've placed, would my business professional liability and or GL cover any claims?
If there's a claim made against this employer, it should, let's say, since my business is a home care placement agency, I may have spoken with this client. It's more or less of a recruiter company,
right,
rather than, yes, placing caregivers to be employees of the families they serve. Family chooses not to get their own general liability and workers' compensation for their new employee caregiver that we've placed. Would if you're placing them, then your general liability and professional liability should pick up. Workers' comp should not be involved because you're not paying that employee. The client is paying the employee directly, if my understanding is correct.
Right.
Does that answer the question?
We'll see if she responds to that. Rod, while we're waiting for a response, how about you let us know how is the best way to contact you?
My office number is area code 201-487-0800, and my extension is 16. My email is a little bit long. It's G as in Gerard, Quinn, Quinn, at Conklin, CONKLINANDKRAFT.com.
And we will provide that information on our page for you. Just as a reminder, if anybody does want to contact back to Gerard for more personal or individual questions, please also feel free to reach out to me. I'm obviously not the guru. That's why I have Gerard, and we've been working together for so many years. But most definitely have a little bit of an understanding that we can get you into the right place and into the right hands. For that, I'm going to say thank you again, Gerard. I thank you.
Thank you.
For being here and sharing your time with us. I'm hoping that we didn't take too much time away from your family. So go do what you do best. And let's maybe schedule next month for a follow-up and getting a little bit more in depth in those other types of insurances that could be available, and of course that are going to be that of protecting our agencies in such a volatile industry.
Thank you very much.
Thank you, Gerard.
Thank you.
You're welcome.
Okay.
Thank you, thank you, thank you.
Be safe
Bye-bye.
and stay well. Bye.
Likewise. Bye-bye.